Happy New Year, everyone. Joshua Hayes of BigWayTrading.com. We're going to do an overall market review. And once again, this on Friday, I didn't get any signals, but I do have a stock setting up in a cup with high handle that I am already long. I will give a little bit of an in-depth analysis about that, and that'll basically be the trade idea for the week. So just want to let everybody know the higher time frames always basically lead to what I do on lower time frames. So with this particular indicator that we're looking at here, remember, price is all that pays. It's all I really care about. Price and volume, profile combined. That's primary indicator. Everything else, everything, doesn't matter what I discuss, is secondary, tertiary, and never really comes into play almost intraday, comes into play end of day, but does not drive the decision making. It's a guidepost. More times when we're red here, red on other indicators, more red lights, slow down, less size, less conviction, less capital at risk. When everything's green light, you're above the zero line on this indicator, you're green on this indicator, and you're above the 50 SMA. Green lights mean go when you get your proper setup. So we're just going to keep that in mind. So the IWM, we're above the zero line here, right? So we're good on the weekly. DIA, above the zero line. Green on the bottom indicator, right? Okay. QQQ. Wow, that was funny how that just switched. I didn't even press enter. How did I do that? Interesting. QQQ, weekly. Good to go. Good to go. And you can see here, when we cross that zero line, we were green here. Good things happen. Would prefer this to happen when you're below the 50 SMA. That's a raging buy signal. And on that note, this is a big miss by me, but when it only happens for 1 week, I can't be upset that I missed this at all, especially considering that when the SPY got below the 50 SMA on the weekly, this indicator was barely above the zero line, and we were already red, and it looked like that the lead line wanted to go below the zero line. So I can't be too upset that I missed this, because a weekly time frame isn't really the time frame I trade off of with this indicator. It's the daily. So now that we know that all the weeklies are above the zero line and we're lined up, what you're looking for now on a daily is the same thing, a proper setup. So SPY just crossed, right? Or we're getting there. What did the weekly look like? Let's go back to that weekly on the SPY. So you can see what the weekly on the SPY looks like. You know that we crossed back in June. So in June, we start looking for entries whenever you get below the 50 SMA and reclaim it if this indicator is above the zero line. Now, once again, things just didn't line up, and now we're in a runaway uptrend. I have discussed over and over how I'm playing it in the previous video lessons. You can back that up and review those if you want. But just so you know, as long as we stay above this zero line, if we can ever get this market below the 50 SMA, especially if this uptrend line is available, one of my IRAs is fully invested again. I sold off half of all my long-term stuff before the sell-off started in 2022. Started that process in 2021. Started to call it back on the way down in 2022. Missed my load with a close below SPY 350. Unreal. 348 was the intraday low on SPY. And since then, I've been piecemealing back into it until I can get these load signals. One of the accounts is back to fully invested. Looking to piecemeal into the others until I can get that set up. And once the price is below this moving average, if this indicator is well above the zero line, all in buy stop above the uptrending line. And I use leverage ETFs. You can use options at the money, out of the money if you're really brave, in the money call options with time, theta decay. I mean, I hope we've never really even talked about options in this, but if you guys don't think that I don't understand how theta decay works, vega, gamma, you are mistaken. I understand the options market extremely well as a derivative to primary equities. So I'm just trying to keep it simple for everybody. So if I can get this below the 50, Everything's lined up, higher time frame weekly, daily. I want to go ahead and punch it. And that goes for the QQQ. And with the IWM, just so you guys know, we recently went to above the zero line. And now that we're above the zero line, you can see here on the daily what can happen once you get above the zero line, pulls back, you have a buy stop above this high, breakout, good to go. I did not trade this on the daily time frame like that, but this is always an option. Once you get above the zero line, you don't get a pullback below the 50, you can do a buy stop above the recent highs. Now, what I wanted to really show everybody is that when we get granular on the hourly time frame, I want to switch this to a 90-day. You can see that we've been slowly getting some negative divergence out there. For this little lesson, we're just going to focus on the SPY and nothing else. So, this last leg of the uptrend, I've basically right here, what day is this? The 13th, November 13th. As we've been going high, so I guess it was actually the 20th. So since November 20th, I've been looking for a pullback. So for over a month, I've been waiting patiently, looking, expecting, wanting, I guess, a pullback, not getting it. As you can see, price is all that pays, right? So even though this indicator goes towards zero, goes below zero, and is showing negative divergences, not only on the most short-term trend, you can see how we're wedging higher here, but here on this indicator, we're going lower, and this high, the market goes to higher highs. This high on this indicator is lower than this high right here. This is negative divergence twice. On a longer intraday time frame on the hourly, negative divergence. On the shorter hourly time frame, negative divergence. So I don't play the hourly, but if you want to, we're getting a pretty solid setup here. How this indicator works is price should not be above the 50 SMA if this indicator is below the zero line. That's how it's supposed to work. Will it work? I don't know. We will find out. Now you can see here, we got below the zero level on this indicator. Price is above the 50. Per the indicator rules, price should not be above the 50 if this indicator is below zero. What did price do anyway? It doesn't. It happens less than it doesn't, but this is why you have to have stops. If once this crossed down, you decided to front run this signal, looking for that breakdown below the 50 and wipe out, you have to have a protective stop above the recent highs. I don't take any trades without a stop. Everything I do has a stop attached. But as you can see, we're weakening. We're getting weaker and weaker and weaker. And as we head into the new year, we need a pull. We really need a pull. I've said it over and over. I'm looking for a pull. I want a pull. You can see the same kind of situation showing up on the QQQ. But so the same situation is there. But remember, if I'm going to take these trades like this, I need to see this indicator not being cute around the zero line. I need to see it decently either above or below to take these signals. So with that being said, let's show you my trade idea for everyone for the next week. All right, we're going over to Telechart from TOS for this one. So FRSH, I want to show you more longer term what I see here. Big ass saucer with handle. Then cup, high handle. What did I see earlier whenever I went long? Big ass saucer, handle, and then an improper, because the handle forms much lower than where it should be relative to the previous highs, an improper cup with handle. That's when I went long. On this day right here, you can see this little line right there. That's called a pocket pivot point signal. FRSH was the leader. It was on my watch. So I put in a buy stop to get long above 21.25. Gave it out to all members at bigwaytrading.com. Everybody can front run my orders. Before I ever set the buy stop at 21.26 on my end, you all know my exact trade pattern. You know that I'm risking to this low, calculating my size from either this low, or this low. I can't remember what it was at the time. In a great market, calculating my size and risking to this low. Now after this day, took some profits. After this day, took some profits, trimming and trailing. I have a stop here, and a final stop right here to make sure that I leave this entire position green. Now, what you will notice here, I want you to look at the weekly time frame. We are triple green on these three indicators, and I will show you at the end of the video lesson that the tickets indicator is also above zero. But you can see that we're triple green on these three weekly indicators. We go to the day time frame. If this is a 21 EMA. If this stock can pull back, consolidate, and give me a hammer candle off the 21 EMA on heavier volume, especially if it's a pocket pivot point signal, that could be a great add signal. If not, this stock breaks out above 24.98, you could set a buy stop at 24.99. I am not taking this trade. This is just a trade idea for everyone. I am already long this stock. I would be interested in buying a hammer off the 21 EMA since we're aligned properly on the weekly, but I would not want to buy a breakout up here in this market being so overbought. This breakout was fine with me because we weren't too extended. Now we're a little extended. But what do I mean by that? Look at where we are here, price in relation to the 50 EMA. And look at where we are now to it. So that's what I mean. Now, if we look at let's just go down here and just pull up the toss chart on FRSH. Just to show everybody. Weekly, we crossed that zero line all the way back in March. Notice how this indicator just gets stronger and stronger. Notice how we're green and green. You already know that we're triple green on the telechart chart. Now you can also see that we're above the zero line on the weekly. Now we get granular, go to the daily, and we're good to go. Green and green, which is another reason why I went long, because we were above the zero line. So everything's in proper alignment. I'm looking to add to the position on a pullback, but you could do a buy stop. If you do a buy stop above this high, where do you risk to? I'd say this gap up area. You can either do it here or the gap fill. And this is another reason why I don't like this trade. Where is my risk at? I don't completely know. All right, everyone. Have a happy new year. Hope this analysis helped you. If it did, let me know in the comments below.